Hey everyone, and welcome to this explainer. I am so thrilled to have you here today. We are unpacking the inner workings of an institution that is quite literally operating on a whole different level right now. We're looking at JPMorgan Chase & Co., the largest bank in the US, fifth largest globally, based on their latest verified updates from August 2026. This isn't just a story about banking, folks. It's about a massive organization operating at an absolutely unprecedented scale, actively shaping the future of finance, tech, and our communities. We've got a lot of fascinating ground to cover, so let's jump right in.
Okay, let's just dive into this number. $21.2 billion. That is the staggering, record-breaking net income JPMorgan Chase reported for just the second quarter of 2026. To put that into perspective, we're talking about a 41% increase year over year. It's the highest quarterly profit in the bank's entire history. Even if you strip out one-time gains, they still completely shattered Wall Street estimates. It's a number that immediately grounds us in the sheer size and dominance of the bank's current operations. So here is our roadmap for today. We'll be hitting 6 key areas. 1. Record financial power. 2. The AI security crusade. 3. A $20 billion acquisition plan. 4. Regulatory realities. 5. The $750 billion housing pledge. And 6. Global expansion.
All right, starting things off with number 1, record-breaking financial power. Back in July 2026, JPM didn't just beat the street. They fundamentally rewrote their own historical records. I mean, just look at these year-over-year revenue leaps across their business lines. Equity markets revenues surged by an incredible 86%. Investment banking fees jumped 30%, hitting levels we haven't seen since 2021. In fact, every single line of business posted record revenue, pushing their total revenue for the quarter to an astonishing $57.35 billion. That's up almost 28% from the previous year. And what's really wild about this momentum is how it's actually altering their future forecasts. Because of this incredibly robust environment, which, by the way, is fueled in part by AI investments and government stimulus, CFO Jeremy Barnum actually raised their full-year net interest income outlook to roughly $105.5 billion. And they're actively returning that value to their shareholders, having just wrapped up a massive $31.6 billion share repurchase program in August.
But as we know, massive scale comes with massive macroeconomic vulnerabilities. Despite all those soaring profits, CEO Jamie Dimon sounded a really cautious note. He warned that global threats like geopolitical instability, persistent inflation, and stretched asset valuations are, in his exact words, shifting below the surface like tectonic plates. It's a vital reminder that a bank of this sheer size is just inextricably linked to the global economy's deepest fault lines.
Which brings us to number 2. The AI security crusade. So Jamie Dimon isn't just sitting back watching those tectonic plates shift, he is actively trying to future-proof the critical infrastructure resting on top of them. In August 2026, it came out that Dimon is personally engaging over 40 CEOs across sectors like energy, water, telecommunications, and aviation. They're forming the Alliance for Critical Infrastructure. Basically, this aims to develop a shared understanding of AI safeguards. They're even collaborating with the Trump administration on these issues to respond directly to urgent threats, like the recent cyber attacks we saw on water systems in states like Minnesota.
And hey, JPMorgan isn't just preaching to other companies here. They are vigorously practicing what they preach. Right now, there are nearly 1,000 live AI use cases currently active within the bank. They're deploying advanced artificial intelligence across risk management, fraud prevention, marketing, you name it. They are fully, literally integrating this technology into their daily operational DNA.
Yet, when he talks about his leadership of this Alliance for Critical Infrastructure, Dimon offered some surprising humility. He actually said, "I am like a support cast member." He seems to prefer framing the bank's role as merely a conduit, helping to interface with the government, offering advice, and taking advice in return to protect the broader economy.
Moving on to number 3, a $20 billion acquisition plan.
This is where we see a major strategic pivot for the bank. Dimon is making a striking departure from his usual preference for organic internal growth. So the crucial point here is just how historically unprecedented this proactive strategy is for them. If you look at the timeline, his largest past deals like Bear Stearns and Walmart in 2008 or First Republic in 2023, those were all crisis-driven. They happened when regulators essentially asked JPMorgan to swoop in and rescue failing rivals. But now, in 2026, Dimon has explicitly stated they are on the hunt, ready to spend between $10 and $20 billion on a major acquisition in the next couple of years, simply because he sees an opportunity.
But what can a bank this large actually buy? Federal law literally bars JPMorgan from buying other large deposit-taking banks, so they have to target adjacent sectors. Analysts are pointing to wealth management, private credit, and financial technology as the primary targets. And we actually already saw a signal of this strategy earlier in 2026 when they bought the UK-based pension tech platform Wealth OS. They're looking for puzzle pieces that just seamlessly mesh with their existing empire.
All right, let's look at number 4, facing heavy regulatory fines.
Because, of course, managing an empire of this size naturally attracts a lot of friction. This is just the defensive reality of running an operation with such a massive global scale. In August alone, the bank faced nearly $350 million in global fines. The OCC assessed $250 million for trade surveillance gaps. The Federal Reserve fined them $98.2 million for inadequate monitoring of market misconduct. Meanwhile, the European Central Bank slapped them with a €12.18 million penalty over incorrectly calculated risk-weighted assets, which is essentially how they measure the risk of their loans and investments. And on top of that, both the Hong Kong Monetary Authority and the Reserve Bank of India issued recent penalties for compliance lapses. The sheer complexity of their global compliance is just staggering.
And adding to all this regulatory pressure, the Wall Street Journal recently reported that federal prosecutors have been reviewing whistleblower claims. These claims allege the bank improperly withheld more than $100 million in reimbursements from clients whose money was stolen. Now, it is absolutely crucial to note that the bank forcefully rejects these allegations, stating they have no merit whatsoever. But it really underscores the intense, continuous scrutiny an institution like this operates under every single day.
Next up, number 5, the $750 billion housing pledge.
Let's shift our focus from Wall Street scale to Main Street impact. This is what they call the American Dream Initiative, and this matters to you and me because it directly addresses the housing supply crisis impacting everyday neighborhoods. Through 2035, JPMorgan intends to deploy over $750 billion to finance 1 million affordable housing units and support 500,000 homebuyers, specifically targeting 200,000 first-time buyers. They are basically leveraging their immense balance sheet to create a massive 40% increase in housing capital compared to the previous decade.
Sean Gresbin, the CEO of Chase Home Lending, really beautifully humanized this data. He said, homeownership has always been at the heart of the American dream. To actually execute this grand vision, provide stability, and build community wealth, the bank is hiring 850 new home lending advisors and boosting their overall mortgage lending by more than 40%.
And finally, number 6, expanding the global footprint.
Because while they are investing heavily in American housing, their 2026 ambitions stretch way beyond U.S. borders. The bank is seeing explosive growth over in the Asia-Pacific region, with corporate banking revenue there growing well above 20%. Markets like Taiwan, South Korea, China, and Australia are booming for them. And a huge driver of this? Client demand for data center and GPU financing. Those graphics processing units are literally the engines for the global AI boom. As this tech wave goes global, JPMorgan is right there financing the infrastructure to support it, which is why they're rapidly increasing their corporate banking staff in the region.
But what I find really fascinating is how they balance this aggressive overseas expansion with defensive corporate maneuvering back home. While they are staffing up across APAC for corporate banking, they are also making some highly strategic defensive hires. For example, they recently brought on Bank of America veteran Amy Lissauer as the global head of shareholder engagement and M&A capital markets. Her main expertise? Managing activist investor pressure. It just perfectly shows a bank that is simultaneously playing fierce offense abroad and incredibly careful defense with its own shareholders.
And that brings us to the end of this explainer on the 2026 landscape for JPMorgan Chase. From shattering profit records and building an absolute AI war chest to hunting for massive acquisitions and deploying $750 billion into American housing, this is a bank operating at a scale rarely seen in corporate history. Whether you love it or just want to watch it closely, they are undeniably shaping the future. Which leaves us with one pretty provocative question. With all this capital and ambition, what sector will JPMorgan reshape next? Thank you so much for joining me for this explainer. Keep learning, and I'll see you next time.